we're looking at gold and silver prices higher than the 1st of January, but obviously everybody's very disappointed that it came off the highs by such a large percentage.
Yeah, and I was speaking to a friend who is in the markets, and what he's hearing, Clive, is that the big money, like the family offices, sovereign wealth funds, they want physical gold and silver. They don't want counterparty risk. And I'm also hearing that liquidity is really drying up. That private equity and private credit, a lot of investors are trying to get out, and they're not getting much for their dollar. They're getting like 30 to 40 cents. And I think what you told me about Switzerland and silver, it's is kind of related. I don't think it's driven by retail. It's driven by the big money. So if we can start with the situation in Switzerland vis-a-vis silver, that would be interesting.
So one of the biggest silver dealers, gold and silver dealers in Switzerland is called Degussa. They are currently out of stock. They were a day or two ago. They've not been able to get any silver stock in for weeks, literally. Of course, silver is coming in the door from sellers, but the second it comes in the door, it's taken by the next person who comes in. It's completely sold out. As far as so they've got nothing at all in silver. As far as gold is concerned, they're almost sold out. All the small bars and all the coins have gone. So all they have left are the 250 gram bars, the 500 gram bars, and the 1 kilo bars. So literally, there is a visible shortage here in Switzerland, and Switzerland is the home to many, many family offices, very many high net worth individuals. So whilst I can't comment on the situation in other countries like the United States, what I do see is that in a country full of wealthy people who bank here, they are basically coming here and helping themselves to what silver or gold they can lay their hands on. And I'm hearing, I was speaking with a guy just the other day, a young man who from the UK who's been trying to load up their silver vault, and they've been going around the various coin dealers trying to lay their hands on it, and the stuff isn't available. Except that there's a little bit available, but this is more collector coins.
Yeah, I saw one of the big dealers here in the UK, not Gold Investments, who I am affiliated with. They always seem to have enough supply, but I think it's Atkinson's. You go on their website, and you can't get 1 ounce Silver Britannias. It's been out of stock for over a week, I think. And Clive, overnight, silver traded down to like 64,
Oh, I
and
didn't see
now,
that. Wow.
yeah, we're now at 74. And of course, COMEX, they raised margins again last night on silver by 20%. That didn't help. And we're also hearing of this Chinese speculator who massively sold short on the Shanghai Futures Exchange. But the rumor is that he was trying to play the spread. He was trying to buy COMEX and sell China. He thought it was going to narrow, but I think all this volatility in silver, a lot of it is just speculative and paper. And I think what you said about what's happening in Switzerland and also what's happening in the UK is really more indicative of the real physical market. And I think, Clive, I've looked at the main U.S. dealers like SD Bullion or AppMax and others to get 1 ounce of silver, like a 1 ounce Silver Eagle, it's around $90 or 87, 88. So yeah, that's what I think is going on. Silver is just highly speculative, unfortunately, and the futures market is kind of wagging the dog right now.
I mean, it's extremely volatile, but the reality here is if you try to get your hands on silver, at least where I am, it's very hard. And if the price is where you said it was, what did you say it was just now, 70 something?
Right now, we are at 73, well, or just below 74. So yeah,
Okay, so
So
I'm going
we're
to
up
try and
about $3 from the close yesterday.
Silver didn't fall because demand disappeared. It fell because paper volatility masked a physical shortage. While prices whipped around and margins were raised 20% overnight on COMEX, the real market quietly froze. In Switzerland, one of the largest bullion dealers has been completely sold out of silver for weeks, with metal disappearing the moment it arrives. Across the UK, standard 1-ounce coins are unavailable, while US retail prices hover near $87 to $90 per ounce, even as futures trade in the low 70s. According to Mario and Clive, this divergence isn't retail frenzy. It's family offices and sovereign money demanding physical metal with no counterparty risk, draining supply as liquidity collapses elsewhere. The paper market is shaking people out, but the physical market is telling a very different story.
Yeah, I mean, I know I won't be able to buy any physical silver at that level, and I would prefer to have physical, but I'm going to have a look after this show is finished to see how I can get my hands on some exposure to silver at that level, because I think that's going to be a good deal personally. And I'll tell you why in a minute.
Yeah, I mean, here in the UK, if you look at the spot price of silver, it's around 54 pounds 60. But if you can get the silver, it's going to cost you like at least 70. And then you have to add the VAT. So this reminds me of 2008, Clive, when gold and silver dropped quite sharply there when Lehman collapsed. And I think it was the same in Switzerland. You can get gold for your clients, physical gold. And if you did get it, the premium was like at least 10%. Yeah.
So, in fact, when we had the Lehman crisis, there was no premium on gold, but there was a delay. So they could buy the gold, but they had to wait 2 weeks, 3 weeks to get the gold.
Yeah.
Now, what I wanted to show you, Mario, is why I think there's a crisis in the silver market looming for March.
Yeah. Do you need to allow me to for you to share?
Yes, if
Let
I
me
could share the screen, that will give me.
allow. Okay, there you go. You can share it now.
Okay, yeah, I see now. So, just to give you a second. What we're looking at, and can you see it, Mario?
Yeah, yeah.
We're right up to date. This is what's called we're starting with the COMEX delivery notices month by month. And if I've converted it, these are contracts which are called for delivery on each month. But if you look at the graph below, the chart below, I've converted it to ounces, bearing in mind that every contract represents 5,000 ounces of silver.
Yeah.
So we got the columns 2024 and 2025, and you can see that every single month in 25 is called for delivery, rate at 24. And overall, over the course of the year, just look at the bottom line here. If you look at the bottom line, it was more than, for the 2025, there was more than double called for delivery than 2024.
Yeah.
Now let's focus. Let's focus on the months that we're in now. This is the delivery notices again, same as we saw above, but I'm just focusing here on January 24, 25, 26. In January 26,
Yeah.
we went from 11.8 million in 25 to 49.4 called for delivery.
Yeah.
Well up from 6.8 in 24. So we had a massive increase in deliveries in January. We're only 4 days into February, and we're seeing nearly as many contracts called for delivery as were called in February 2025. But what's interesting is I put a column here, open interest on 9th of January. So on the 9th of January, there were 19 million ounces of open interest for the February contract. Almost all of that has been called, all that 19 million has been called for delivery, i.e. we're talking about over 90%
Yeah.
of what was open has been called for delivery in February. We've still got 4 million ounces left. That's probably going to be called for delivery. So we're going to see in the month of February probably something like 98% of the open contracts called for delivery.
Yeah, Clive, the other thing that could happen, you could see people come in and start opening positions further in the February contract, so that open interest could even go higher, and they could ask for more delivery.
And exactly, you've hit the nail on the head there, Mario, because if you look here at the March open interest, it's gone down from 508 million ounces to 429 million ounces. So what's happening is people are saying, and I'm going to tell you why in a minute, they don't trust that they're going to get delivery in March. So what are they doing? They're rolling their contract forward or backwards, depending which way you look at it, rolling it backwards actually, into January and February to take delivery in the earlier months, just in case they can't get it in March. And I'm going to show you why in a second they may not get it in March. But let's concentrate on March for a second. We see that March 24, there was 27 million ounces called for delivery. March 25, 80 million. That's 3 times as much were called for delivery in March 25. We don't know what's going to be called for delivery in March 26, but potentially, if all of those 429 million ounces were called for delivery, we'd be going from 27 to 80 to 429 million ounces. I'm not expecting all of that to be called for delivery, by the way, but don't forget that in February, 90 to 98% of the contracts are being called for delivery. So, but even if 25% of that is called for delivery, that's a very unstressed situation. We're talking about more than 100 million ounces called for delivery. And what I want to look at now
And I think that's how much they have right now in registered category, 100 million.
Yep. Well, there we are. I'm going to show you. Here's the line for registered.
Yeah.
In October, there was 167 million ounces. By early January, 123. Mid-January, 114. Now, only 103 million ounces. The registered silver available for delivery is dropping very, very sharply. Now, don't forget, there's 429 million ounces, which could be called for delivery in March. Even if 25% of that, very low, a very, very low number is called for delivery. That's 100 million ounces, of which there's only 100 million ounces available for delivery anyway. And that number, that 100 million, is dropping day by day by day. So by the time we get to the 27th of February, when March arrives, we could well be in the registered category down to 87, 88 million ounces in registered against calls for delivery, even in a very conservative market of 100 million plus.
Yeah.
But I don't think it's going to be 25% of the March contract called for delivery. I think it's going to be more like 75% of this.
I agree. And Clive, the other thing that people need to realize, and I was a futures and options broker for like 20 years, is that for silver, the January and February contracts, they're not the main, they're not like on the run, they're not like a front month. And despite that, people still want to take delivery in those months, which shows that they want the silver now. And March, though, that's the front month right now, and you usually see a lot more deliveries in the front month. So, yeah, this is very interesting. And I noticed as well in China, in the exchanges there, the futures and the gold exchange, also the vault amounts are dropping quite rapidly. And so the other thing, Clive, we could be in for COMEX can't go, they can't default because they've got rules where they could declare force majeure and cash settle, right? But from what we're seeing, people don't want cash settled. They want the physical. So what do you think is going to happen to the silver contract on COMEX?
Well, look, when we looked at those numbers, silver is clearly being drained, not only from the registered category, but also from the eligible category. But if both categories were going down, the eligible category went down from, let's just give that figure again. So the registered went down from 167 in October millions to 103 by now. The eligible went down from 329 to 294. So both categories are being drained. The
Yeah,
silver is leaving COMEX. We don't know where it's going, but the fact is, it looks like there won't be enough to meet future deliveries if this trend continues.
eligible as well is not really readily available, isn't it? It's
No,
like
it's
whether that's somewhere else in the world or
yeah,
it's
eligible.
encumbered as well, right? Isn't it?
What eligible means, it's the right size bars, but it's owned by somebody, such as an exchange traded fund, a foreign government, a family office, or somebody else who hasn't yet arranged for moving it out of COMEX. I mean, COMEX is a very cheap and convenient place to store your gold. You can buy your gold on COMEX, and you could choose to leave it there, but putting it into the eligible category, but because you're not planning to sell it, of course, some of it will have a price, but some of it will never be sold. It's held by ETFs. They can't sell gold, can't help sell silver unless the underlying investors want to cash in.
Yeah. So high ho silver. That's
Hi
you like
ho.
this. Yeah, it's one of the mugs that Karen, who runs the merchandise store, she designed it. And if you're interested in one, there's a link to the merchandise store in the description. And I think she's been designing other mugs. And there's other stuff as well. It's the Rudy merchandise store. Have a sip of my coffee. Mm.
Well, Mario, all I can say, when you designed it, hi ho silver was the right word, but perhaps given what's going on, it should be high low silver.
Yeah, right now, yeah, high, low, yeah. But I still think we're going a lot higher. And what we've seen now is just a shakeout of the very speculative players, maybe a little bit of manipulation by the big shorts. But I actually think the uh, the JP Morgan and the banks, they can see, I think, that, the US, I saw a headline that they want to work with Mexico on cooperating with minerals. And the biggest export for Mexico in minerals is silver. They didn't say silver. And and also JD Vance, the vice president, said that they're going to put a floor on critical mineral prices. So yeah, he said that a couple of days ago. So they don't want they want the price to be stable and even higher maybe.
Nearly 98% of February silver contracts are now being demanded for delivery, and that is not normal. According to Mario and Clive, we're watching buyers abandon future months and rush into January and February because they don't trust March delivery. Open interest that once sat near 19 million ounces has almost entirely been called for physical metal, while registered COMEX silver has collapsed from 167 million ounces in October to just over 100 million today, and falling daily. Even a conservative 25% delivery request in March would overwhelm available supply, and the market knows it. This isn't speculation anymore. It's a visible scramble for real silver right now.
Yeah, I mean, a revaluation of gold, I think, is something which cannot be avoided by the United States, and they will not have, they will do it because it's another way of reducing the debt. The very simple mechanism of doing that would be a sale and repurchase agreement with the Federal Reserve. They would force the Federal Reserve into that, which means the Treasury gets to keep its gold, but effectively forces the Treasury to buy that gold and sell it back to them. But basically, they're paying the Federal Reserve with what's called gold notes, which are not part of the national debt. They are perpetual and they have no interest on them. So
Yeah.
effectively, they end up getting some fresh money that they can spend to reduce the debt in exchange for giving the Federal Reserve something which can never be redeemed and has no interest
Yeah,
and is not part of the debt.
yeah, they just revalued the gold certificates that the Fed has that you said are perpetual and not redeemable to, let's say, $5,000. And then the Fed, that's the Fed's asset, and then they send the cash to the general treasury account, which is a liability, and for the Fed, and the treasury will have like 1.2 trillion to play with without increasing the debt. But Clive, I don't know if you've seen this, and this is about the U.S. gold in Fort Knox. But apparently, well, this is from the Epstein files. It says here that Russia says IMF chief jailed for discovering all U.S. gold is gone. And granted, this is from 2011. Do you remember Dominique Strauss-Kahn? He was jailed in the U.S. There's a scandal, and he lost his job. And apparently, this Epstein file is saying that he discovered that there was no gold in Fort Knox. I personally think there is gold in Fort Knox, and if there wasn't, then they've had enough time to replenish it.
Well, yeah, so that's probably the underlying reason why they wanted him in jail. But I think the official crime is he forgot to leave a large tip for the chambermaid.
Yeah.
If you know what I mean.
Yeah, chambermaid, yeah. I know.
She came back to get her tip and there wasn't one.
Yeah.
And then all hell broke loose.
Yeah, it's weird. That was a weird incident at the time, wasn't it? What else is going on? Well, Clive, let's see here. The other thing I saw is that the open interest, let's see, for gold is the lowest it's been for 2 years, the gold futures on COMEX. And I guess that could mean a couple of things. I want to see your opinion on it. One is that there's still a lot of room for speculative longs of gold to get in. So there's still a lot of room on the upside. Or the other one is that, the smart money, the big money, family offices, central banks, they're now avoiding COMEX because COMEX is mainly a place where you trade for fiat profits, right? So maybe that's what it is. COMEX, people are not really, they're going for the physical. They're buying elsewhere. What do you think?
Yeah, I think it's clear that everywhere in the world, taking physical delivery into your possession where you can lay your hands on it is a far more sensible strategy than leaving it in the hands of a third party where you have to ask permission to get it. Let's just say I think there are now calls going out for Germany to repatriate the rest of its gold. We'll see how long that takes them to get it out of the United States.
Yeah, I think they've still got about 1,200 tons at the New York Fed. And I would definitely not, if I was Germany, I'd be worried about having my gold there.
Yeah, I mean, I think it's a trend around the world. People are saying, I'd rather have it where it's in my control than in the control of a third party who has to give me permission to get it.
Yeah. So you told me there's something you wanted to talk about as well, Clive? I forgot now.
No, I think the thing I wanted to talk about was this crunch coming in March on silver.
Oh, yeah, the crunch in March. Yeah.
I mean, the other thing to say, which may have gone under the radar screen for many people, is we're having a bit of a sell-off in NASDAQ at the moment, particularly the mega caps. There's been this story doing the rounds about the incestuous behavior of various technology companies. Whilst people sort of see this as kind of incestuous, I don't think a lot of people have expressed correctly the true problem here. And I can say it in a few words to make it simple for everybody. When you engage in vendor financing, which means you pay somebody money, you loan it to them, or you invest in their shares, or you have some sort of arrangement with them where you give them the money so they can buy your product. It's not illegal, but what that does, it creates immediate sales and profits, which is very good for the shareholders, particularly the insiders, the company management who want to offload their shares on the market. So it increases sales and earnings, improving the share price. But it does that at the expense of the company taking on future risk. Because the company to whom you've given the money or invested in their shares, there is no guarantee that they will make a profit in the future, and therefore there's no guarantee that they're going to be able to repay you or that the shares you bought will actually be worth something in the future. So these companies which are engaging in this vendor financing are pretty much swapping future risk or taking on future risk to boost current profits. And that is a formula which may or may not go wrong, but what it is doing is allowing an opportunity for the insiders, the ones who work for these large companies, to offload their shares at a higher share price than they would have otherwise had if those sales had never existed.
So, zoom out for a second. Silver didn't break because demand vanished. It broke because the paper market whipped price around while the physical market quietly froze. Switzerland's biggest dealers are sold out for weeks. UK 1-ounce coins are unavailable. And in the US, you've got silver eagles still trading around $87 to $90, while futures print the low 70s. That gap is the tell. It's not retail, it's family offices and sovereign money refusing counterparty risk and pulling metal off the market. And the COMEX data makes it worse. Nearly 98% of February open interest is being called for delivery. Registered silver has fallen from about 167 million ounces to approximately 103 million ounces, and March still shows 429 million ounces of open interest hanging over a shrinking pile of deliverable supply. Even a conservative scenario starts stressing inventory. And that's why buyers are front-running March right now. And now you know what's happening in silver. You're going to need the next piece. What this does to bonds, liquidity, and the next forced move in hard assets. Click the next video. It connects the final dot most people are still missing.